Hello everyone, I am CA Manish Mishra and we are going to discuss today the non-resident taxation. This is a very important concept for the cross-border transaction and equally it is important for the CA final examination and anyone who want to enhance his knowledge about the international taxation or the basics of cross-border transaction. We understand that there is generally two principles in cross-border transaction. Either they tax based on residence or source. When I say residence, there are countries who tax their citizen based on their residential status. Similarly, there are certain sort of income which is taxed irrespective of your residential status based on the source country. From the country where this income is generated, they get taxable there. Moving forward, we need to define the residential status first for any income to be taxable in India or for that matter any part of the world. Why residential status is important? Because when we file income tax return or as per the income tax law, there are certain income which is taxable for the residents, but the same income is not taxable if you are a non-resident. Similarly, there are certain income which is taxable for the residents and ordinary residents, but the same income is not taxable if you are resident but not ordinary resident. So, primarily, we have to find or determine the residential status of anyone before filing his income tax return. So we can conclude it here, the incidence of tax is dependent on the residential status under the Act. Now we understand that citizenship is not determined for income tax residence. What I mean is, if you are a citizen of India, you are not automatically become tax residents of India. Your tax residency defined as per the provision of Section 6 of Income Tax Act 1961. So there are three status that has been defined in the statute, which is residence and ordinary residence. The second is residence but not ordinary residence, and the third one is non-residence. So these are the three major categories under which your residential status is defined. So we are today going to discuss Section 6 in an elaborate and confined manner so that it could be easy for you to determine the residential status, and make sure that every CA final exam there is one question from this part. So make sure that this topic is thoroughly covered. Moving back to the topic, we understand that there are two rules that has been defined by in Section 6 subsection 1, that if you are in India for at least 182 days, you are a resident of India, or if you haven't been for 182 days in previous year in India, then if you are at least for 60 days in India in previous year and preceding for previous year for at least 365 days, then you are a resident of India. If none of these conditions, there are two conditions I just discussed. The first one, if you are in India for at least 182 days in previous year, then you are a resident of India. Or if you are for at least 60 days in previous year in India and 365 days preceding previous year in India, then you are a resident of India. If none of these conditions are satisfied, then you are a non-resident. That's a very simple and concise explanation of Section 6 subsection 1. Now, when we talk about how to define the residence day, how we calculate the residential days, that you need to remember the day of arrival, day of departure from India is also calculated. If you are staying up to 12 nautical miles into the Indian Sea, then also you will be considered in India only. So this is a residential, this calculation has to be done before the for determination of your domicile or residence status in India. Moving back to the other topic, that there are certain proviso. There are two exceptions, or I'll say proviso to section 6 subsection 1. What are those provisions? If you are an Indian citizen working on Indian ship, living in India or staying in India as a crew member for the purpose of employment, then your stay has to be 182 days, 182 days to be a residence. So first status, if you are an Indian citizen working on an Indian ship, leaving India for employment as a crew member, then 60 days rule is not applicable to you. You have to stay in previous year for at least 182 days to be a resident of India. Similarly, if you are an Indian resident or a POI of India working outside India, come to visit India, anybody who is working outside India, is a person of Indian origin or person of Indian origin coming back to India for visit or meeting their family's member or relatives and stay here for more than 182 days, then only he will be considered a resident. Otherwise, he is a non-resident. So basically, these are two exceptions given to for the benefit of these people. I mean, someone who is staying outside India, they can come and visit India, and they will not be considered residents until they cross this defined, this threshold of 182 days. So law has provision for everyone. Similarly, there is again a new clause that has been inserted, that if you are a person of Indian residence, your total income is exceeding 15 lakhs from the Indian source. If your total income exceeds 15 lakhs from the Indian source, it's not talk about the outside India. Any income earned from outside India is not considered. But if your Indian income is more than 15 lakhs, and if you visit India and you stay here for more than 182 days, then you are a resident of India. If you stay here for less than 182 days, then you are a non-resident. But if your stay is between 120 days to 182 days, then you will be considered residents but not ordinary residents. So basically, generally people used to plan their stay in India in such a way that they can avoid the tax citizenship of India and avoid paying taxes. To cover those loopholes, income tax inserted these provisions to cover those scenarios. So what is those scenario? Let me rephrase it. If your income is above 15 lakhs, if your Indian income is above 15 lakhs, 15 lakhs, and if you stay here in India for 182 days, your previous year stay is more than 182 days, you are a resident of India, ordinary residents of India. Done. If your income is above 15 lakhs, you stay in India for less than 120 days, you are a non-resident. But what if you stay here for more than 120 days but less than 122 days? In that scenario, you will be covered as a resident but not ordinary residents. There is a new proviso that has been inserted by probably in the Finance Act 2020, that if your income is more than 15 lakhs, you are an Indian citizen and you are not a tax citizen of anywhere in the world, in that case, you will be considered residents but not ordinary residents of India, and your income will be taxable in India. Again, this is a very good example that there are people, or there could be a scenario where people are having substantial income from India and they are staying abroad just to avoid Indian income tax, and they are not a tax citizen of that country. They are not paying any taxes in that country. In those scenarios will be covered into this proviso, and they have to pay taxes in India. Now, how to determine the stay in India? As we all know, all we understand, the date of departure, the stamp on your passport, the day of leaving India, and day of arrival in India will be calculated and will be part of your stay in India. Again, as we know that how the non-residence status is defined. Achha, let me tell you one more thing, that this residence and non-residence number of years would be, this scenario is applicable only for individual and half, because for firms, company or HOF there is a different rule that we are going to discuss in further, but we are discussing here individual and half, how they will be considered in India. For non-residents, who will be considered non-residents? If you are a non-resident in 9 out of 10 preceding previous year. If you are a non-resident in 9 out of 10 preceding previous year, you are a non-resident. Or if you have stay here in India for less than 729 days in last 7 preceding previous year. If you have been in India for less than 729 days preceding previous years in last 7 previous year, then you will be considered non-residents. Again, if your income is, as we just discussed, if your income is above 15 lakhs and you stay here in India for more than 120 days but less than 182 days, you will be considered non-resident. For half, company and firm, as we all discussed, the place of control and management will be the deciding factor. So even if you are an Indian company, but your place of effective management is outside India, if you are a firm but your place of effective management or your place of control and management is outside India, you will be considered non-residents. Ideally, company incorporated in India is an Indian company and considered residents. But if you are a company registered outside India and your place of effective management or head office is in India, you are conducting majority of your board meeting here in India, you will be considered Indian. You will be considered residents of India for tax purposes. Let me also tell you, there is a concept of substance over form. So instead of this artificial arrangement, they will look for the substance. So this is the section 6, based on which the residential status for the purpose of income tax can be decided. Let me summarize it in one word. There is section 6, subsection 1, which says, clause B says that if you stay here in India for 182 days, you are a resident of India. Clause C says that if you fail the first test, if you stay in previous year in India is 60 days and your stay in preceding previous 4 years is at least 365 days, then you are a resident of India. If you fail to satisfy any of these conditions, you are a non-resident. Now, how the residence and ordinary residence is decided? If you are a non-residence in 9 out of 10 preceding previous year, financial years, you are a non-resident. If your stay in India is less than 729 days in last 7 previous year, then you are considered residents but ordinary residents. If you fail to satisfy any of these conditions, obviously you are a non-resident. There are few proviso as well, that if you are an Indian citizen, a person of Indian origin, come to visit India, your stay here is for less than 182 days, you will be considered non-resident. It's just a relaxation that if you are Indian citizen working outside, come to visit India, if your stay is for less than 182 days, you are a non-resident for tax purposes. Similarly, if you are an Indian citizen working as a crew member and leaving India for employment, you come to visit or you are on a ship in India for less than 182 days, you will be considered non-resident. Again, there is certain more provision introduced by the Finance Act 2020 to avoid or to mitigate the loophole in the taxation system, that if your income is more than 15 lakhs from the Indian source, irrespective of your foreign income, if your Indian income is less than 15 lakhs, you stay here in India for less than 182 days, you will be considered residents, non-residents. Similarly, if your income is above 15 lakhs, if your income is more than 15 lakhs, and if you are in India for 182 days, more than 182 days, you will be considered residents and ordinary residents and will be taxable accordingly. Similarly, if your income is above 15 lakhs but your stay in India in previous year is above 120 days but less than 182 days, you will be considered residents but not ordinary residents. For firms, company, LOP, the place of management and control is very important. Indian registered company is generally having control in India. They will be considered residents for the tax purposes. Similarly, company registered outside India, if they have their effective management based here in India, they will be considered tax residents for India. Similarly, if you are a firm, your majority of decisions or control is in India, your management is in India, it will be considered a Indian residence. Similarly, if you are an Indian resident but your effective management and control, you are a majority of the board meeting, or you are a subsidiary of any foreign company and most of the board meeting is happening outside India, your effective control is outside India, you will be considered non-residents for tax purpose. At last, there is a substance over form. So accordingly, if there is any artificial planning just to avoid the taxation, substance over form will take place. Hope this is hopeful for your knowledge, for your CA final examination, or for the basic knowledge purpose. Follow me more, because the next video will be coming for will be discussing section 5, scope of total income, which is very important section for international taxation. Follow me more for more information. Thank you.